Hi everybody, my name is Mary Redmond and I'm talking about the Euro-US dollar again. It looks like it's pretty clear that the Euro-US dollar pair has established itself in a new downward trend. It's got this downward trending channel. It's below its 50-day moving average. These two big red candlestick spikes show a clear trend change, and usually that's what you get with a trend change. So in order to reverse this and go back into an upward trend, we'd probably have to have a clean break out of this channel. We'd have to have bullish engulfing candlesticks that would show a break back above its 50-day moving average now, which is the range of 43. And probably the only thing that would make that happen would be either further hawkish statements by the ECB. Mr. Trichet would have come out, and he is due to speak this week, and reiterate that he plans to raise rates or maintain a high vigilance against inflation, or else if market participants were to have a major reaction to any type of statement that's going on at the EU summit in Brussels regarding the additional bailout or restructuring measures that may be taken. So, of course, nobody knows exactly what's going to happen, and it's highly probable that the finance ministers will work out some type of repackaging or additional financing terms for the loans that Greece has, simply because, if Greece can't pay back their loans this year, they'll probably be extended a couple of years, or they'll get additional aid from the EU and the IMF and the European Financial Stability Fund. But despite all of this, and despite the fact that there might be a good message that comes out after the meeting that they have made progress on these talks, and there's really no quick, easy solution. There's going to be a drag that's going to occur for a couple of years as Ireland and Portugal and Greece struggle to repay their loans and to continue to implement these austerity budgets, because high levels of austerity can impose a real drag on economic growth. So you've been hit with a double whammy, and they've haven't been able to make their debt payments, and yet their economies, the economies of these countries, continue to grow slowly or contract. So you've got a real disparity in the EU, and you've got some very rich countries and some very poor countries. And it's pretty obvious that despite the political opposition, the rich countries are going to continue to have to offer assistance to the poor countries if they want the euro to remain a viable currency. So there's no magic wand anybody can wave. There's no quick or easy solution. But if you have a statement from the finance ministers that they have the situation under control, or perhaps that the Greek finances are not as bad as had been anticipated, you could see a spike up in the euro. And today was Monday. You did see a spike up to the top of this channel, which I think is a good short opportunity. And if it stays in this channel, I believe the next stop level is going to be in the 38.50 area, which is that's an important Fibonacci support level. And depending on the market's reaction to whatever news comes out this week, that could be reached this week or in the next couple of weeks. So I still favor the downside on the euro. And there are a couple of things going on in the market. You've got the regular stock markets, which the Dow and the S&P failed to sustain rallies today. They kind of had a weak, failed rally right around midday. The Dow was up 30 points, then it closed lower. It means that the major fund managers, the big institutions, as well as retail investors, they're hesitating before committing additional funds at this point, because they know that the liquidity is going to wind down in the summer as the Fed winds down its quantitative easing. So people might want to look for a market pullback. And with all of this going on, you've got a lot of uncertainty. And the old saying is the market hates uncertainty even more than it hates outright bad news. So the question is, what would it take? How much lower is the euro going to go, and what would it take to put it back in an upward trend? Well, it's going to be kind of hard to reverse the process right now. As I said, you'd have to have some very dramatic news coming out of the ECB. And with these countries, the smaller countries facing a big crunch with their finances, it's less likely that the ECB is going to raise rates. And the market participants are anticipating now that they're going to be at least 90 basis points of rate hikes from the ECB in the next 12 months, but that still may be overly aggressive. And of course, these markets always try to price in rate hikes, but nobody knows what's going to happen in the next 3 to 6 months down the line in terms of the inflation report, or whether or not any of these countries are going to be able to meet their austerity measures. So in the meantime, as long as the euro stays within this channel, I think moves up to the top of the channel are going to be good short opportunities. And we also want to keep an eye on the volatility index. The volatility index has been trending slightly higher. It has been very low over the last 6 months, with the exception of the time that we saw during the Japanese tsunami. We did see a big spike up in the VIX this year. But what we saw in the last couple of days, for people who watch the VIX, which I do, we saw a spike up to 17.5 level, and we didn't really see much of a response from the market. The fact is that over the last 6 months or so, anytime we had a spike up to this level of the volatility index, or really any spike up at all, we saw a pretty good market rally. But that's what happens during a bull market, here and here. Now what we're seeing is these slight spikes up in the VIX cause less of a reaction in the market. So that could mean that we're in a trend transition. And we're in a transition from a bull market in the stock market to a sideways market to what may become a bear market in the next few months. So that's what I'm going to keep an eye on. And generally speaking, when the VIX is low, it's usually better to short the riskier currencies. And when the VIX is high, you might want to take a profit. But what's high and what's low in the VIX is all relative to other factors in the market. So if we're starting to anticipate that the VIX is going to trend higher over the next few months, then we're going to start looking at a higher VIX being up in the 20s. And of course, during the severe market crashes, then the VIX spikes much, much higher. So that's another factor to take into consideration, along with the other news that could be coming out of the EU this week.